Hey guys, what's up and welcome to a new Tesla update video. So in today's video, we're going to be taking a look at what happened in the stock market. Of course, mainly focusing on Tesla with a little bit of this, indexes like the SPY and the QQQ. So let's just get right into it. If you guys enjoy, don't forget to hit that like button. It does help a lot, guys. Leave a comment down below and what your current thoughts are on Tesla and just the market in general. Absolute kangaroo market that we are in right now. It's absolutely brutal. A lot of traps left and right, like bear traps, bull traps galore, like everywhere. It's unbelievable. Seriously, it's kind of ridiculous. But anyway, let's just check it out. Let's see what happens. Tesla only down 0.7%, while the QQQ was actually down 1.5%. So the Tesla is actually outperforming the QQQ pretty decently 2 days in a row. I mean, especially yesterday. Yesterday was just, I don't know what the hell. Yesterday was pretty insane. People were saying it's because the whole issue with Russia-Ukraine happening and how it's putting pressure on gas, because Russia is a pretty large gas exporter. Because of this whole issue and because gas might become, essentially a problem, if you will, to export to, North America, for instance, and pretty much outside of Russia at this point, honestly, it kind of puts more emphasis and goodwill, if you will. I don't know how to put it, but essentially it makes EVs and anything to do with that, whole renewable energy, all that kind of stuff, a lot more appealing. So that's essentially what happened there. Of course, Tesla is a very large part of that, if not one of the biggest parts, actually. So that's essentially one of the reasons why Tesla and other things similar to that did rally yesterday. But nonetheless, even after the rally, Tesla is still somehow, I'm actually a little surprised, but it is still somehow holding on to its gains from yesterday. It hardly let any of it go today. Again, I'm still leaning on the more bearish side. And I do think that, especially coming tomorrow with Fed, I don't know. I'm personally leaning a little bit more bearish, but let's look at the chart and see what's happening and get a better idea as to also why I'm leaning a bit more bearish in the coming, this week, maybe even a little bit of next week, something like that. So let's just get right into it. So Tesla, after rallying up, as you can see, it did leave a gap down here. Now, keep in mind, guys, actually, I did forgot to mention this, but all the way up here in the top left, you can see it did leave a gap all the way up here to be filled as well. So we have two gaps, one below us and one above us. This one is at around 922, and the one below us is around 810, which I did talk about. Personally, I expect the 810 to get filled first, and the reason is because, number one, like I said yesterday, we did have an insane rally, like a 26% rally or something like that over the course of 3 days. Number one, that's just ridiculous. It's hard to have that kind of rally without some form of retracements. It's just how it works, right? Stocks don't only go up just as much; they don't only go down. But also taking a look at a little bit more of a micro level of the chart. By the way, we are still, of course, in this bull flag. We are trying our hardest to kind of push over this teal line, by the way, on a macro level, unsuccessfully still. Looks a little bit better on the weekly to get a better idea of what it looks like. Just, not successful at pushing over, which, again, it's to be expected only because, again, it's a pretty big resistance. Now, taking a look at the micro level, you can see as we zoom in here. So one thing I like to look at, RSI is one of my personal favorite things, and a lot of people like the MACD. I'm not a huge fan of the MACD personally, but if you want to take a look at the MACD, you can see it did cross to the bearish side all the way somewhere around this general level. So all of these right here were essentially like bull traps. All these rallies up here were bull traps because it still hasn't crossed over to the upside. Even today, it's still on the leaning towards the bearish side overall. No cross yet on the 15-minute chart. 30-minute looks even. I think the longer time frame we go, it's worse. Yeah, the 1 hour is starting to cross to the downside actually, which isn't ideal. Daily, however, is looking like it wants to cross to the upside. This is why I don't like the MACD too much personally. I'm not a huge fan of it. But again, on the 15-minute, which is what we care about the next week-ish, right, give or take at the moment. It's looking like, it's still having issues crossing over to the bullish side. The RSI, which is I personally like the RSI quite a bit. You can see here, like I said, it made the highest highs of the RSI, which is around the 82 level, all the way around this level here, where Tesla pushed to like 875. Then Tesla pushed all the way up to 890 essentially, which is ridiculous. And the RSI still substantially lower than whatever this was up here, right? So that's, again, once, like I said earlier, or in yesterday's video, a bearish divergence. The stock graph will usually end up following the RSI. So keep that in mind, guys. Another reason why I expect downside coming up here. Again, the Fed talking tomorrow and Thursday. I mean, who knows how that's going to go? It's higher chance, in my opinion, that it'll be more bearish than bullish. But you never know, obviously. Anything can happen with that. That's essentially hard to predict. That's very hard to predict, almost impossible to predict, actually. And then following that, on top of this, rally that we had, Tesla's making essentially a bearish looking head and shoulder pattern on the micro level. Now, granted, this is of course, you know, a fairly small head and shoulders pattern, but nonetheless, it is still very much there. And so there's two things you want to look at here. Number one, when we did kind of start making this essentially, you know, this movement and pattern up here, number one, you want to look at this kind of area right here, something like along the lines of this, right? We essentially broke under, hold on, so let me make it like this, something like this. Right, so we never had a candle on the 15-minute close underneath this as we were kind of rallying upwards, right? You can see every single candle over here pretty much closed above this line over and over and over and over and over and over, right? Always closing above. And then we finally broke under, fell really aggressively, rallied back up, even above it, got rejected, and still closed below it. That is usually a sign that it broke under, came back up to retest it, this old support that now is currently resistance, as you can see. The retest was successful in the sense that it couldn't break it, so this did act as a new resistance now. Usually that will follow downside. On top of this, I also believe there's more downside, mainly because we are again setting up the head and shoulders pattern. Again, it's a small one, not a huge one, but nonetheless, it is still very much here, right? Shoulder, head, shoulder. Again, I don't want to seem like, you know, some bear that's just trying to, you know, be negative, but, you know, it's just, it is what it is. It is what it is. Again, I don't think this would be like some insane pullback to, you know, oh my God, you know, we're going to like new lows. No, I don't expect it to be new lows, but at the very least, I'm expecting at least this gap fill to 810. And then I'm expecting a bounce off of this 800 to 810 level. Usually when you gap fill, it tends to overshoot, whether it's up or down, right? In this case, you know, it'll probably overshoot downwards. But again, I definitely expect 800 to probably hold. And I'll be surprised if we fall much lower than 800 at all. So I'm expecting a move down, gap fill, probably bounce around this 810 to 800 level, and then I expect that to essentially confirm a low or a higher low, and hopefully we can off of that start slowly kind of entering that bull territory and slowly start actually rallying up, and then, you know, eventually come up to retest this red line over here, and then eventually of course break through that as well. That's essentially what I'm currently predicting. Of course, this market is extremely difficult, very volatile, and very unpredictable in all honesty. So it is a difficult market to navigate. I've been, you know, I've gotten kind of, you know, wrecked a little bit here myself as well on my calls that I sell rather. I'm not gonna lie, I'm underwater on some, but it is what it is, right? This day right here is what put me underwater. This day just, I don't know. I think a lot of people got destroyed one way or another on this day because this was just an extremely unexpected day. But yeah, it is what it is. So that's essentially what I'm predicting at the very moment, guys. Let me know what you think down below in the comment section below. A lot of people like to look at the moving averages. I like to look at moving averages as well. I'm not a huge fan of moving averages. I think they're okay. I personally don't like them too much because, as you can see, like, I don't know. Personal opinion, again, personal opinion. I personally think moving averages and the MACD are very much overrated. I really think that they're overrated. Something like the 200 is okay to look at, in my opinion. 200 is fine. But even then, like, it's pretty overrated in my honest opinion. I don't look at them too much. I mainly look at support. By far the best thing to look at, in my opinion, is just simply support resistance. Where does it look like a lot of people are buying? Where does it look like a lot of people are selling? By far the easiest and by far the most effective, in my opinion. People like to overcomplicate things and have like 20 different indicators they look at. I just think at that point, it's just ridiculous. Like, it doesn't make any sense. You're just doing too many things for no reason at all, in my opinion. You're looking at too many factors. Like, sometimes you really just don't need that many factors. But that's my personal opinion. Patterns, support resistance, RSI. Those are my favorite by far. I like to look at those. Those are my favorite. That's how I usually determine the movements of stocks. And yeah, that's what I think is by far the best way to look at it. And of course, like things like gap fills, that's part of the pattern section. But either way, that's it for this video, guys. Let me know what you think down below. Thank you all so much for watching. See you for the next one. Peace.